All right, guys, thank you so much. Today is our Theta Alpha Fund update. This is June the 24th. I'm Matthew Todman, and this is Danielle. We both portfolio managers on the Theta Alpha Fund. And we're going to start with a month-end update. So we're going to talk a little bit about a new stock inclusion. We're going to talk about what's going on with the fund. We're going to talk about what we see upcoming. And yeah, if there's any questions, that's great. And if not, our contact information is at the back of the slide presentation, and we'd be happy to field any and all of your questions or calls. So the key today is, why are we including Marvell Technology in the fund? Okay, and rather than make an AI bet on just a few stocks, it's better to how to say, spread the wealth, for lack of a better term, across other stocks that are definitely impacted by AI, not necessarily the big seven or magnificent seven, but these other stocks as well. And we're going to dive into what Marvel does itself, and have a chat about that. So what does it do, Danielle? Walk us through this a little bit. What does it
Yeah.
do?
Yeah. So Marvell Technology is a semiconductor company that develops data infrastructure solutions. So I would differentiate it with a simple example. NVIDIA, we all know it manufactures those compute GPUs. Micron Technology manufactures those memory chips, and the likes of AMD, Intel, they manufacture CPUs. So that's compute. But when you have all of this compute at one place, and because of AI, there is a lot of compute at one place, you need something for this compute to communicate with one another. And Marvel, there, this is where Marvell Technology and the likes of Broadcom comes in. Okay, because these two companies, they basically develop those communication, I would say communication chips.
Highways, for lack of a better term.
Yeah, communication highways or communication chips or like communication, that medium for this compute to communicate with one another. Because like if you have compute and you don't have communication infrastructure, I don't think that compute is gonna work in tandem. So you need these compute chips, these compute transistors, these compute equipments in order to work in tandem, in order for a lot of compute power to work together to drive results. So when a data center orders a lot of GPUs and CPUs and a lot of other compute equipment, it would need these chips and these circuits and these machines in order for the overall ecosystem to work. So Marvell Technology basically develops compute chips and also other compute switches, and there are other like technical terms that we'll get into. Okay, but basically, Marvell Technology deals with compute, and it's similar to Broadcom in a lot of ways. Okay, so the company specializes in high performance system on chip architectures, and this enables AI, cloud computing, and next generation communication networks. Okay, so it's very technical, but I'm gonna just simplify it as much as possible so that everyone could understand what Marvell does and why we included that in the portfolio. Okay. So the first reason that we included Marvell Technology, you could ask, you like there, and someone can ask me this question that we already have Broadcom, and it deals in the same business, like it manufactures or develops those compute equipment, those communication equipments for these computers to work together, right? So why include Marvell? The first reason is Marvell Technology, its fiscal year ended in March of 2026. So it has a different fiscal year. We are in calendar year of 2026, but its fiscal year ended in March. So it completed acquisitions of Celestial AI and XCon Technologies to expand its AI and data center connectivity capabilities. Now, why these acquisitions were valuable? The reason is right now Marvell Technology deals in communication equipments, but right now those communication equipments are made out of fiber, optic fiber. Okay, so that's the fastest way for compute to communicate with one another. All of these transistors, switches, and chips are made out of optical fiber, and these optical fiber lines communicate with one another at a very high speed. But what Celestial AI does, it brings in photonic interconnect technology designed to improve data movement within next generation. So what this would do is data would transfer at the speed of light, which is an entirely different or an entirely new technology, an innovative technology. And if this comes online, data would be processed or would be moved at a much faster pace than this optic fiber through than how it moves through optic fiber channel. Okay, so that's the first reason. If this goes through, if this venture becomes successful, then there would be no comparison between Marvell and other competitors in the business that they deal in. Okay, so together, these acquisitions reinforce Marvell's strategy of becoming a leading provider of high-speed connectivity and scale-up infrastructure for AI workloads. So right now, Marvell deals in high-speed connectivity, but optic fiber is the answer to high-speed connectivity. But once this comes online, or if this venture is successful, then like it'll be a different, like Marvell will be playing in a different ballpark altogether. Okay. So this is the first reason. Marvell is headquartered in the US and operates across key semiconductor markets, including China, India, Israel, Japan, Singapore, South Korea, Taiwan, and Vietnam. Okay, so it's headquartered in US, but it has like semiconductor markets elsewhere as well. um, the segments or the markets that Marvell Technology deals in. So it deals in data center, and that this makes up the majority of its revenue right now. So right, a lot of data centers require because of these hyperscalers, basically hyperscalers. And I would like categorize these. I would just name these hyperscalers: Amazon, Amazon, Microsoft, and Alphabet. So these three hyperscalers, basically, they are expanding their cloud network or cloud infrastructure, and they need a lot of GPUs, CPUs, memory chips in order to like scale up their data centers. Okay, so for that they also need these connectivity chips for all of, because like without connectivity chips they're not gonna that compute is not gonna communicate with one another. And the example that Matthew gave, it's the same thing. So think of I saw this example that Matthew showed me. Like think of GPUs or CPUs as like these tall buildings, but you need fly highways and these roads to reach these tall buildings. Otherwise, you would have these tall buildings, but there would be no way to reach these tall buildings, right? So these highways or these roads are basically these connectivity devices that Marvell produces. So right now, because there's a lot of demand of AI from these data centers, that's why there's the bulk of connectivity also is being demanded by data centers. So that's the first market that Marvell Technology deals in. The second is communication and enterprise networking. So enterprise networking is basically these big companies, but they are not like as big as like these hyperscalers, but these are big companies that need Ethernet switches or routers or wireless access points, broadband access, anything to do with internet or anything to do with communication or connectivity of technology. So a big company would need this. So Marvell Technology provides solutions to these companies. Consumers also need, we also need Wi-Fi routers. We also have gaming consoles, personal computers, and those personal computers need to communicate, okay, with satellites or with our routers or with even with like our televisions. Okay, so if you need to connect your television to your PC, there's a way, and Marvell Technology provides solutions for that. Okay, automotive and industrial. So this is a growing segment. Marvell Technology is also into this. So all of these self-driving cars and robotics, Marvell Technologies connectivity devices would also feature into those products. So it basically deals in four markets, with data center market being the biggest market. Um, Moving on, I have just mentioned it previously that companies increasingly focus on customized silicon optical connectivity. So it's focused on next generation connectivity, and that is where its moat lies, or where that's where it's like that's where the appeal lies. Okay, because it's focusing on next generation high speed connectivity, and if this venture is successful, as I've said it previously, it can make enormous amounts of money. And I'll get you a quote by a leading CEO of a leading company, like what that CEO said about Marvel. Okay, key products include custom ASICs, optical and electrical interconnects, Ethernet networking solutions, processors, storage controllers, and fiber channel connectivity products. So these are very technical things. But I'm going to get to the second reason that we included Marvell to the portfolio. The second reason is Marvell Technology has also started developing custom chips. Okay. So a lot of hyperscalers right now, Meta Platforms, Amazon, Microsoft, and Alphabet, for their own specific requirements or needs, they need custom chips. They can't they don't want to buy expensive GPUs from NVIDIA or from the likes of AMD. The reason being that there are certain tasks that require a lot of compute power. And for that, GPUs from NVIDIA and AMD come into play. But there are other specific tasks that may not require that much of compute power. And a company may subsidize its cost, or it may reduce its cost by developing some chips in-house in order to just perform those specific tasks. And that is where Marvell Technology and the likes of Broadcom come into play, because they help these hyperscalers design those custom chips to perform those specific tasks. So these chips are called custom chips. There's another name for it, and it's this custom ASICs, and they have become one of Marvell's most important growth drivers. Okay, benefiting from increasing demand among hyperscalers for proprietary AI accelerators and custom infrastructure. So this is the second reason, because this is not going to stop. We are getting this information that Alphabet is coming up with its TPUs, and Amazon is coming up with its own custom silicon chip that's called Titan. I don't remember the name. It starts with T. Alphabet and Meta Platform is also coming up with its own custom chips. And in future, they might sell these chips to third parties as well. Okay, right now they're using them in-house, but they might sell it to third parties. And if the demand grows, Marvell is going to be the beneficiary, because Marvell helps design those chips. Without the expertise of Marvell or Broadcom, those companies would not be able to design those chips. So that is where the expertise of Marvell and Broadcom come into play. And if these chips are sold to third parties, and if these companies, these hyperscalers make money out of it, Marvell and Broadcom are also going to make money as a side effect. Okay, so that is the second biggest reason that we've included Marvell in the portfolio. Okay, furthermore, as AI clusters grow from thousands to hundreds of thousands of GPUs, data movement is becoming a significant bottleneck. So we earlier in this year, we included Micron Technology in the portfolio. And the reason was that we thought Micron Technology memory is becoming a bottleneck, okay, within AI. So we are always looking for bottlenecks within AI. We can't just stick to the likes of NVIDIA and just hope that it keeps going up and the portfolio increases in value. Within AI, there are a lot of other complex things that are becoming a requirement of this overall AI ecosystem. And within those complexities, there are bottlenecks that are arising. Okay, so we are very focused on what bottlenecks are arising, and if we can take advantage of that. We took advantage of the memory bottleneck. We included Micron in the portfolio earlier in the year, and we see this connectivity or this data movement becoming a major bottleneck between now and the sometime in the future. So that's why we decided to include Marvell and Broadcom both in the portfolio. Broadcom we have already included, but Marvell was also important because connectivity and data movement is needed. Like without this, you cannot this AI infrastructure cannot function. So if it becomes bottleneck, Marvell holds all the pricing power, and that is where Marvell stands to make more and more money. Apart from it, a custom silicon chips I've already told, they are also catering to that segment. So these two are very big, could be very big revenue drivers for Marvell. Okay. So the other reason for Marvell is right now, they are dealing in optical networking that addresses the need for higher bandwidth, lower power consumption, lower latency, and longer reach capability that traditional copper cables may struggle to provide. So they are in optic networking right now, but they aspire to deal in photonic networking, which would be state of the art. So no one would be able to match that technology. And if a company is the first mover in that technology, like it'll stand to gain the most from that technology. So that is what we believe in. Um, the acquisition, like I said it before, the acquisition of Celestial AI is strategically important because Celestial's photonic fabric is not merely another networking chip. Instead, it enables optical communication between GPUs across racks and throughout AI clusters by using light rather than electrical signals to transmit data. So if data is moving at the speed of light, there's no comparison, there's no competitor to it. As AI clusters scale to more than 100,000 GPUs, as I said, technologies such as photonic fabric are expected to become increasingly valuable as they help address the bandwidth, latency, power consumption, and data movement. So we actually are the first mover in this. So we have recognized this as an opportunity, and if like they become successful, the stock could go up much higher than what it is trading at right now. So like we are the first mover in this. Previously, we recognized trends once they like became somewhat known. But this is like I don't think a lot of people would know about this. Like they are like working toward like there are companies that are working towards this technology. And if this comes live, it'll be a game changer. Okay. So this chart basically, although Marvel has not come up, has not like scaled up or like it's not successful yet in this technology, but even before this, because of Marvel's expertise in connectivity solutions and custom silicon chips, the stock price has this. If you see this dotted line, this bold dotted line, you see how the stock has performed was versus the S&P, which is this um, dotted line, and the PHLX Semiconductor ETF. So this is Philadelphia something semiconductor index, and it also has other like big chip companies. So how has that ETF performed versus how the S&P has performed versus how Marvell has performed? So there's like Marvell is like beaten both by a wide margin. Okay. Marvel's performance year to date is like 265%. It's already done like a lot, but right now the pace at which these semiconductor stocks are growing, like there's no stop to it. Right now, they're like everything is looking rosy for these semiconductor stocks. So I don't expect this price appreciation to stop anytime soon. Okay. As I said before, majority of their revenue lies within the data center market, and but they like basically I bifurcated in order to simplify everything into four markets, but they basically divided into two markets. One's data center that deals with hyperscalers, and the other is communication and other that deals with all the other like consumer enterprises and automobile and robotics. So that deals in that market. Basically, data center is the major revenue maker for the company. This also brings a very important I would say concern into this equation, as which is like as long as these data center providers are spending money, Marvell and the likes of Micron and Nvidia, they stand to make more money because of their spending, these are companies are earning revenue, and if that spending goes down, these companies would make lesser revenue, and that would not be a good thing for their stock price. Okay. As far as how the company has performed versus expectations, it's beaten on revenue, but not by much. Okay, it's just beaten its revenue estimates, it's beaten its earnings estimate. The latest earnings estimate is a bit higher. It's almost $1 per share. We would see like how the company does, and the company is slated to report on August 20th. So that remains to be seen. Now coming to what I promised earlier, like I want to quote like a comment from a CEO, and that CEO is Jensen Huang. He is NVIDIA CEO. He described, and it just happened recently. He described Marvell as the next trillion-dollar company. Okay, citing the company's critical role in AI infrastructure, networking, and connectivity. So, as AI clusters scale to tens of thousands of accelerators, Marvell's optical interconnect switching and custom silicon solutions are becoming increasingly important. I mentioned that previously. As of now, Marvel's market cap is 270 billion, say 270 billion. So if it's like gonna go to 1 trillion, there's like still around 700 billion more to go. Okay. This is as per Jensen Huang. Okay. But we also do see promise in this because um, of their like high market share within networking and connectivity, because of it producing custom silicon chips, and because of it also aspiring to become a photonic networking provider. So because of these three reasons, we see value in this company. Okay. These technologies would be required regardless of whether the underlying accelerators come from NVIDIA, AMD, Alphabet, Amazon, or Microsoft. So these networking solutions are required at all costs. In our opinion, the statement also highlights how the growth of AI clusters is driving substantial demand for networking and connectivity solutions. As AI workloads become increasingly distributed, the ability to move data efficiently between processors become more valuable, creating a significant opportunity for companies such as Marvell. This is the investment thesis basically. Matthew, do you want to like comment on
Yeah,
it?
yeah, like that's why you go for the technical stuff. But yeah, I mean, so we included this because, the giant players are obviously NVIDIA, Broadcom, AMD, TSMC, large chip makers. Um, but like it's not only that. Like they are not the only players that make AI available to us as retailers or as companies requiring AI services, right? And I'm as an example, that has taken place probably in the last 50, 60 years is the automotive industry, right? The automotive industry is not just GM and Chevrolet, not or GM and Chevrolet, but GM, Ford, and Chrysler. Especially when you hear, like, you don't hear it very often right now, but you hear about, oh well, these are going to affect, X many tens of thousands of jobs if such and such happens. And what that means is that there's an overflow effect, because if a Ford goes down and stops producing less, so God forbid goes bankrupt, it's not just Ford that suffers, but it's the people that make the tires for Ford, that Ford puts on its cars, and the people that make the alternators, and the OEM providers, and it has a ripple effect. And in the same way, this is we're already well into the game where there are other players similar to that of the automotive industry, where you have the big kind of the 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 big players of NVIDIA, AMD, et cetera. And you need other smaller players to make everything work. And I think the highway analogy is a very nice analogy as well. So,
Yeah.
and it fits into this AI play. And we in our team, we often have a discussion to say, well, is this an AI fund? And I actually put my hand up and I say, no, this is not an AI fund. I go, this is an innovation fund. Today, innovation primarily takes on the name of artificial intelligence. But if you back this up about 5 or 7 years before, if, like, the fund wasn't in existence, but back then it was like, okay, well, cloud storage, well, that was
Mhm.
innovation. Okay, you know, other kind of related items were considered innovative. Searching, like search engines, Google, this type of stuff was kind of innovation. Now we've transitioned to of course Meta and advertising and whatnot, like the list goes on, but basically the idea of what innovation is has now migrated to AI for the last significant amount of time, right? Now that could change in the future, right? AI is a new industry, and it will also, as time goes on, become a mature industry. And we saw a little bit of that kind of intra-tech rotation happen over the last few down days, didn't we, Danielle? We saw, like, well, when these newer chip or chip related companies are selling off, a lot of the time the some of the money went to the Microsofts and the Metas of the world, because they're considered more mature issuers but still in the technology space, right? And of course, money went to other spots as well, but we did see a little bit of that movement, right? So, I think it's important to have several layers to this AI play so that we are we are exposed, because what we're seeing is that this Magnificent Seven this year, they have had a reasonably good year, but these other derivative players, they have had an amazing year. And it's important that we do our due diligence and get exposure to those companies, but not before our due diligence. So I'm not too concerned if stocks move up a whole bunch and we haven't done our own due diligence on the stock and run it through the appropriate approval processes for inclusion in the portfolio. But we have to obviously do that due diligence in-house, get comfortable around the positions, and then actually implement the positioning here, right?
Yeah.
What one interesting thing is, I think, in this market is that, these companies know one another, right? Like this is like the old school tie coming into full effect, right? Like how many of these, big heads of companies are there, Danielle? Right? There's not a unlimited number of these people, right? We have the Jensen Huangs and the Zuckerbergs, and the Sundar Pichais and the heads of these other derivative players as well, and it's there in close proximity with each other, and we see comments like from Jensen Huang saying, yeah, this is going to be the next big thing, right? And yeah, and now like in our own portfolio, you know, uh, I think what do we have it at 1.8% right now? What is it at?
Okay, so like put position, including put, it's 1.9, but
Yeah,
without it, it's 0.9. Like
yeah.
long
So we're
position.
building into the position,
Yeah.
and we're probably either now or in the future, we're probably gonna be looking to up that exposure, right? But at the right time, not when things are necessarily at its highest, right? And that's when you're kind of emotionally more attached to saying, "Oh man, it's at this highest. Let's buy." It's like, okay, well, let's really take a deep breath, and maybe it is a time to buy, but maybe it's also the time to wait, right? And these things need to be decided on a case by case basis, right? Um, so in terms of the index itself here, we see the S&P 500 now. That's the broader index, and we'll go on to the Nasdaq in a moment. But we do see this is Daniel. This is as of this morning or yesterday
No,
morning.
this is yesterday close.
Yesterday's close, right? So we had a bit of a down day yesterday, right? It was, I believe, it was reasonably painful, which obviously affected the S&P and the Nasdaq. And but we see that it is kind of treading water at that the second highest dotted line there, right? In around that 74.85. And things declined a little bit more today, but we had a little bit of Micron. That I wouldn't say surprise, but you know certainly was what looks like from the onset beneficial earnings report to its shareholders.
Yeah,
And we'll get
in my opinion, it brings back the AI trade on track.
Well, I mean, Danielle, this is one of those times where your verbiage is just more forthright than me. I want to be as diplomatic as possible, but yeah, it seems to bring back the AI trade, and people got it was this is a fun update call, and we're going to be speaking about Marvel, but yeah, you know, I would be remiss to not at least touch upon a little bit of Micron, which happened literally like an hour ago, right, or an hour and a half ago, and yeah, they had. We'll just say that well, you can look it up yourselves, but they had materially beaten expectations on the EPS and revenue front. I think that's a very fair statement, and I think that's a
Gross
strong
margin
statement,
front as well. Yeah, gross
right?
margin front as well. Yeah.
What's that?
Gross margin as well.
And gross margin, yes, yeah, and not by a little, by a significant amount, right?
Yeah.
Um, so we see here, yeah, we've climbed the wall of worry from a technical perspective, and yeah, maybe we're holding steady at just 7,400, and Danielle switched to the Nasdaq, and it is kind of the same chart, isn't it, Danielle?
It's a mirror image of the previous.
Yeah, and 20 years ago, this wouldn't be the same chart,
This wouldn't be the same chart. Because
but
like
now we see
it's basically like whatever stocks are driving the Nasdaq, the same stocks are driving the S&P more or less.
because of dual listing, right?
Yeah.
So. Yeah, and that's what we see here, right? And don't forget, this is a Nasdaq 100 index, and that's an S&P 500 index. But these stocks that are driving the Nasdaq 100, they are giant players, right? With some of them with trillion-dollar market caps or more. So yes, they're this that these large numbers are going to move the averages there, right? And we see the same type of thing. And you know what? I think after hours, I caught a glimpse of this just before the call. Micron's up about 16%. That
16?
16% in after hours trading. That's what I saw before I
I
jumped onto
think
this call.
11.
Yeah,
11.
Micron, not Microsoft. Micron stock up 16% as soaring prices from memory crunch lead to quadrupling of revenue.
Hmm.
Yeah, well, no one really complains when the revenue quadruples period over period. So,
But like what the interesting part is, and we're not gonna, it's just like the revenue, the gross margin was up above 80%. That normally happens with software companies only. That used to happen with software companies in their prime. That doesn't happen with
yeah,
a company that's like manufacturing chips.
yeah,
So
um,
much is their pricing power.
exactly. So yeah, I think this AI trade could be back on the table. But we'll see tomorrow, and as the rest of the week and month comes to an end, and as trading continues. But certainly another kind of another push forward for this AI trade, right?
Yeah.
Let's keep going here, Danielle. So we have here, we're at about 19 positions here, guys. Um, our our approach here is to overweight stocks that we feel most bullish about, right? And that's exactly what we have done. But we are very careful about the weighting that we assign to more mature issuers, right? And we have to allocate our funds to where they are treated best, but on a risk-adjusted basis, right? Which is why we still would see certain companies here, like there's a very, we have long discussions sometimes about, okay, well, what about Microsoft, right? What about Microsoft? It's lagging, but you can't, I don't think it's a prudent decision to say, okay, well, no more Microsoft. It's like, well, it's the stalwart. It is certainly part of the AI play, just hasn't performed recently. And we can't have this kind of, I think the term is a short, like literally it's called short termism, right? We can't have that kind of view, especially with a new industry where the time horizon is several years, right? So we won't be adopting that short-termism view just because something hasn't performed in the recent past. So we are happy with allocations. We are always seeking to adjust them more beneficially. And yeah, but like right now, they're beginning to work for us very well this year, I would say. I think that's a fair statement in the near term. And yeah, we have to be prudent but efficient when adding names, and not adding names just because we see, hey, this one went up like 20% last month. That's not a reason to add a name. The reason to add a name is, hey, this stock went up 20% this month, and we believe it in fundamentally, and we like the chart, and we like the management, and we like the business idea. Like all those need to really click, not just to say, hey, such and such went up a good chunk today, right? Because otherwise you'd be adding stocks left, right, and center, which makes no sense at all, right? Let's continue on here, Danielle, unless you have anything else to say on the slide.
No, 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 no. I think you covered pretty much everything.
Yeah. Here we have, current put exposure 5.9%, long stock exposure about 94%. So yeah, we have a little bit of cash there as well. We are about 11 and a bit percent in the Nasdaq hedge back to Canada. We are lagging the index, and we are lagging the index primarily because of these second derivative companies like Marvell, like Micron, et cetera, that have shot up this past year. But we need to first do our due diligence as to why they should be included in the portfolio, and that's the bulk of that. With that being said, we are catching up with that index last couple months. I'd say pretty nicely. I don't want to see us catch up 10% in one month. I think that may be actually an unhealthy sign. That means we may have taken a little bit too much risk. So we want to see a slow but steady gain on that index. Danielle, anything else to say here?
I just wanted to say one other thing, which is we still, the other reason for this lag was we also still believe in the likes of Microsoft, Meta Platforms, those companies that haven't performed well this whole year, like Tesla. We still believe in those companies, and I honestly think like by in the second half of this year they're gonna do well, but it really boils down to what they say in the next earnings. But they are gonna do well. Like it's just like right now they're spending a lot. We have kept that in the portfolio, and that, like performance wise, does not help in the short term because like you have kept those stocks that haven't performed well. So you would lag the index, but we do know once they take off, we're gonna catch up on the index. So that's what I believe in. I believe like they're gonna do well. Right now they're in this investment phase, but once those returns start showing up, that's when the faith comes true.
Yeah, absolutely. Let's continue on here. So yeah, here are the fund details, guys. Registered account, yes, it's eligible. Fee is 2.5. It is for a high risk portfolio. This is a portfolio that is supposed to be over years and you will and a time horizon over years. So this is if you have 5 or 10 years and you want to put this money aside, yeah, absolutely. You can redeem anytime, absolutely. But like, that this is not to be this should not be used for a short-term gain fund, right? That's the reality of this, right? It is for the growth investor. And yeah, open to accredited investors, portfolio managers, and in SMA accounts. Let's continue on, Danielle. So what to look out for? We have the seasonality matrix, and we go over this for a sense of completion, guys. But when we have such strong headlines crossing the newswire, seasonality just sometimes quite doesn't make it, does it? Doesn't cut it in terms of ranking and prioritizing and impacting the stock market. And we're seeing this again. June is, I wouldn't say it's over, but we have about what tomorrow, so 2 trading days, and then what 4 or 5 trading days left, I think. Um, and then we're out of the month, and we're into July, right? And July we can see here. I mean, if you were a betting man, Danielle, it looks
Yeah.
like July is positive most months.
July is positive. I'm most months with all of these indices. So seasonality wise, July poses to be a very positive month. As far as I remember, as long as I remember, July has been positive in the past 2 or 3 years as well. Apart from like 2024 when there was this carry trade unwinding, like normally July has been positive.
Yeah, yeah. So, I mean, I think if this is this being the case, this does act as a mild indicator to say if we can be more or less aggressive in terms of deploying capital. But I think that's perhaps the limit of its utility in this market environment because, an adverse CPI or war will take precedence over this, most times, right? But, you know, in the absence of other news, which we don't have absence of other news, unfortunately, we've been in this predicament this last year where there's an absence of news because the news isn't different. The news is the same, right? It's like the same type of news is dominating the marketplace. Interest rates, inflation, interest rates, war. That's pretty much been like, I mean, there's only so much you can talk about that, right? Like how many times can one country win a war? I don't understand that, but I digress. But that being said, you have the same kind of news dominate the market, so it doesn't seem to oscillate very well. And I think when that happens, you're constantly in that cycle, and this type of data kind of becomes secondary, tertiary, fourth place, et cetera, et cetera. Let's continue on.
So this data also shows that July has been for the S&P for the past 20 years, July has returned 2.4%, the gain frequency has been 80%. So like all indications, if this is an indication of something, it's like July seasonality wise turn like normally the positive month.
Absolutely. Let's continue on. So yeah, guys, if you have any questions, contact myself, Danielle, or David. Here's our contact information. We're all portfolio managers at Cohort Capital, and Danielle and I are the portfolio managers for the fund. Um, and yeah, let's continue on. And here's a disclaimer, which we need to put on, and we'll leave that on for a few seconds here, guys. Get a chance to read it. It may sound pedantic, but yes, we do need to have this just to maintain compliance with the various regulations we are under. So we do need to have this. It's important. Let's continue on, Danielle. And yeah, actually, 2 pages of disclaimers. Okay, two
Yeah.
pages of disclaimers this time. All right. All right, let's continue on. Maybe this is it. All right. Thank you very much, guys. If you have any questions, let us know. This will be posted to YouTube very shortly. And as always, thank you for your support. And thank you for tuning into us. And if you have any questions, reach out. Happy to hear from you. Have a great night. Bye.
Thank you. Bye.